Dave, Bill S1013 prohibits passing insurance deductibles to individual unit owners.
Well, in New Jersey, we are almost always doing this. The statute existing when it comes to condominiums mandates that deductibles be passed on to owners that are affected by the loss, unless your master deed or your bylaws say otherwise. So from what I can tell, this potential law would completely undo that. This would be a significant change to what the law is currently. There are a lot of reasons to change the law the way the proponent of this law would like it changed. My view, though, is that the situation as it's currently set up is correct, which is why it's been in effect since the Condominium Act was created. I mean, this is a 40, 45, 50-year law type of dynamic here with how insurance deductibles have been handled in condominiums in New Jersey for that long, and it's also consistent with how most states handle it.
It says it bans community associations from charging a unit owner or a group of unit owners the deductible. So they're picking out one group of unit owners,
right,
and charging them a different amount or an assessment for an insurance issue. Am I reading it wrong?
No.
Because that I thought was not acceptable in most cases.
It's not. That's not really what it is. What happens is if you have an insurance in condominiums, insurance covers. This is so complicated to explain. Insurance is not about fault. It's about like coverage. So condominium insurance covers the outside of a building and in some instances the inside of a building, even your cabinets perhaps. The statute currently says that when you have a claim, water leaks from the guy upstairs or there's a hurricane, that there's a claim and there's a deductible for that claim. Like we all have with our car insurance and everything, a deductible. That deductible is a deficiency. So if you need $100,000 to fix what's been destroyed by the incident, you only get 95 grand, but you still need the 5. So who pays the 5? Under current law in New Jersey and many other states, you assess the 5 against only those people that are affected by the claim, not against everybody else. This law would make it so that everybody else has to share in the $5,000. And the reason that's a problem, and the reason why the legislature has not changed this for 50 plus years, is because the way the current insurance market works, individual people, if they get their own personal insurance, their HO6 coverage, if they get their regular insurance for whatever it is, a couple $100 a year, you can get coverage for your share of a loss. So if you share, if your share of the $5,000 deductible in my hypothetical is $2,000, and you have the right insurance through State Farm or something, let's say your personal insurance, you submit the $2,000 to State Farm and they will cover it. They will send you a check for it, less your own deductible, which might be $75. So the way the insurance market is set up now is by allowing the deductible to be passed along to individual owners. They're then able to just simply take that money and pass it on to their own insurance company. So for all intents and purposes, nobody pays anything except the insurance companies.
I guess the only people that would be for this then would be maybe some insurance companies. I don't know if that's what Dave was implying or not.
That's how I see it too. Bad, Bill.